This video is a very simplified lecture to understand about business, major categories of accounts and the fundamental rules of debit and credit. For easy understanding, there are typical illustrations of major business transactions along with its picturization, making the student completely doubt-free. Business and rules of debit and credit. Dual aspect is the basic principle or foundation of accounting. The concept of dual aspect provides the very basic of recording business transactions in the books of accounts. This principle states that every business transaction has dual effect as it involves something like a give and take concept. Also, in every transaction at least two accounting elements are involved. In this context, the business entity concept got lots of significance. The concept of business entity assumes that business has a distinct and separate entity from its owner. For the accounting process, the business and its owner are to be treated as two separate entities. The complete process of recording business transactions is totally for the business and not for the owner. Under this concept, the fundamental interpretation is business is an artificial person created by law. Once the business is formed, all the accounting entries are to be made for the business and owner of the business is only an investor of capital. The proprietor invests capital in a business. Once the owner completed all statutory formalities towards the commencement of business, the business enterprise starts functioning with its name. Once the business starts functioning, the business and its owner will become two different entities. A business enterprise, which is an artificial person, can receive and take cash, open bank account and deposit and withdraw money. It can own and also dispose various kinds of assets for its functioning. The business can borrow money and can earn the same after certain period. A business entity can engage into its various expenses and also receive incomes. The business can appoint required number of employees to take care of its various functions. The business enterprise can engage into various other business transactions like statutory, legal and such other functions. The business can also act as receiver or giver in certain business transactions. In double entry accounting, every transaction affects at least two accounts. Here, if the total amount of one account is debit, must be equal to the total amount of credit of another account in a business transaction. So, for every debit, there is an equal and opposite credit. There are 5 categories of accounts for the purpose of recording the business transactions. They are A. Asset, B. Liability, C. Capital, D. Expenses or losses and E. Incomes or gains. In exceptional cases, certain transactions are related to any receiver or giver, by which significance of personal account will arise. To refresh the memory, below are the explanations for 5 categories of accounts. A. Asset. Assets are economic resources owned by a business having monetary value. B. Liability. Liabilities are obligations of a business or debts which must pay back in future. C. Capital. Capital is the amount invested by owner in a business. So, for a business, capital is an obligation, as the ownership is with the proprietor who invested money in the form of capital. In case any amount is withdrawn from the capital will be as drawings. The fundamental rules of debit and credit applicable for the above categories of accounts are as below. The application of applying the rule for each account is a pivotal part in recording the business transactions. The correct knowledge on fundamental rules and the proper analysis of business transaction only leads to a decision to confirm which account is to be debited and which is to be credited. Each category of account will have its own rule related to debit and credit of the accounting element with a solid reason. If you do not have a clear idea on account is to debited and which is to be credited, you cannot answer the examination questions with confidence. Rules of debit and credit. 1. Asset account. With regard to asset account, the increase in asset is to be debited and the decrease in asset is to be credited. 2. Expenses and losses account. The expenses and losses are directly linked to capital. When there is increase in expenses or losses, the particular expenses account or loss is to be debited. Similarly, decrease in expenses or losses is to credited by using particular expenses or loss. Rules of debit and credit. 3. Capital account. When there is an increase in the amount of capital, the same is to be credited, as capital is an obligation to business. At the same time, if there is any decrease in the amount of capital, the amount is to be debited, as the reduction in capital reduces the business's obligation. 4. Liability account. When there is an increase in the amount of liability, the same is to be credited, as liability is an obligation to business. Similarly, if there is any increase in the amount of liability, the amount is to be debited, as the reduction in liability reduces the business's obligation. Rules of debit and credit. 5. Income or gain account. Regarding income or gains, if the business receives an income or gain, the capital of the business increases and particular income or gain account is to be credited. When there a decrease in the income or gain, the capital account of the business decreases and particular income or gain account is to be debited. 6. Personal account. During certain cases, an account named personal account may be used. In the case of personal account, the receiver connected to the business is to be debited and on the other hand giver is to be credited. Illustration 1. Mohit invested capital into his business by cash 5 lakhs rupees. In this illustration, the explanation is as below. Explanation. The capital of the business got increased from 0 to 5 lakhs. As per debit and credit rule, when capital increased, the same is to be treated as credit. Here, cash is the second account which got monetary value, is to be treated as asset and the asset status in business increased from 0 to 5 lakhs. So, as per principle, when the business cash increased from 0 to 5 lakhs and is debit. Solution: cash debit and capital credit for 5 lakhs rupees. Picturization for the above explanation can make you understand very well with regard to debit and credit rule. The amount of invest making into the business increases its capital and is credit, and on the other hand the receipt of cash into the business will increase cash, being an asset, is debit. Illustration 2. Machinery purchased for cash costing 2 lakhs rupees. Explanation. Here, one account element is machinery and second is cash. Machinery is an accounting element having monetary value and it is an asset. In this business transaction, the value of machinery in business increased and it is debit. Similarly, cash is second account, having monetary value and it is also an asset. In this transaction the value of cash in business decreased and it is credit. Solution: machinery debit and cash credit for 2 lakhs rupees. The picturization of the above explanation will make you understand the concept of debit and credit clearer, without any kinds of doubt. Here, by the purchase of machinery, the value of assets in the business increases and machinery is debit. Also, towards this purchase, business gave cash by which the total assets of the business decreases and cash is credit. Illustration 3. Cash borrowed from bank as loan 1 lakh rupees. Explanation. In this illustration, bank loan account is cash borrowed from a bank by the business, which is to be repaid within a specific time. Hence, bank loan account is an increase in liability and is credit. By borrowing bank loan, cash which received is an increase of asset of the business and is debit. Solution: debit cash and credit bank loan for 1 lakh rupees. The picturization of the above explanation will make you understand the concept of debit and credit clearer, without any kinds of doubt. Here, business borrowed cash as loan from bank, by which cash comes into business and value of assets increases and cash is debit. At the same time, when business took a loan from bank and same is refundable after certain period, the liability of the business increases and bank loan is credit. Illustration 4. Purchased goods on credit from Rohit for 1,50,000 rupees. Explanation. In this illustration, goods, also known as inventory, is one account which got value and an asset. There is a separate topic goods account, which will lecture shortly in another video. By purchase of goods, the asset in the business increased and goods is debit. The goods are purchased on credit from Rohit and the business has to pay the value of goods after some time is an increase of obligation or liability. As the amount is payable to Rohit, his account is credit. If you consider Rohit under personal account under this illustration, Rohit is the giver of goods and Rohit account is to be credited. Solution: debit goods and credit Rohit 1,50,000 rupees. The picturization of the above explanation will make you understand the concept of debit and credit clearer, without any kinds of doubt. In this illustration, the goods, which is an asset, were received by the business and is debit. At the same time, goods were purchased from Rohit on credit basis and is an increase in liability and the amount is returnable after certain period, the Rohit account is to be credited. In this case, you can also take Rohit under personal account and here Rohit is the giver of goods and Rohit account is to be credited. Illustration 5. Sold goods on credit to Sohan for 1,20,000 rupees. Explanation. In this illustration, as the goods are sold on credit, the first accounting element is goods, an asset, having monetary value got sold, by which the stock inventory decreased is to be credited. The goods were sold to Sohan and the business is supposed to receive money from Sohan and a debtor to the business. Debtor, who due money to the business, is an asset and there is an increase and is to be debited. If we use the principle of per account also, the receiver of goods is Sohan and as per principle receiver is to be debited. Solution. Debit Sohan and credit goods 1,20,000 rupees. The picturization of the above explanation will make you understand the concept of debit and credit clearer, without any kinds of doubt. Under this illustration, the goods were sold to Sohan, who became a debtor to the business and also due to the business. A debtor or any amount due to business is an asset. Here, there is an increase in debtor account and same is to be debited. If you take the rules of personal account, Sohan is the receiver of goods and as per the principles of personal account, the receiver, Sohan, is to be debited. By sale of goods, also an asset, decreased by sale of goods is to be credited. Illustration 6. Cash deposited into bank 30,000 rupees. Explanation. In this illustration, the cash got deposited into the business's bank account and the bank deposit is owned by business and having monetary value and increased the asset and bank account is to be debited. Cash, which is an asset, gone out from business to bank by decreasing the total cash in hand and cash account is to be credited. Solution: bank debit and cash credit for 30,000 rupees. The picturization of the above explanation will make you understand the concept of debit and credit clearer, without any kinds of doubt. Here, cash got deposited in the business's bank account. This bank deposit is an increase in asset, and bank account is to be debited. Similarly, when cash got deposited into bank account, the cash in hand, which is an asset, got decreased and cash accounted is to be credited. Illustration 7. Paid building rent 5,000 rupees. Explanation. In this illustration, this payment of rent is an expense for the business, and as per accounting rule, expense will reduce the capital and will be an account to be debited. Regarding expenses, the specific expenses account name will have to be used as debit instead of debiting capital. So, the rent account will be debited in this business transaction. Here, the word paid denotes paid cash and business's cash in hand, which is an asset, decreased become credit. Solution. Rent debit and cash credit for 5,000 rupees. The picturization of the above explanation will make you understand the concept of debit and credit clearer, without any kinds of doubt. The payment of rent is an expense for the business and will decrease the capital and will be an account to be debited. Regarding expenses, the specific expenses account name will have to be used as debit and the rent account will be debited. Here, the word paid denotes paid cash and business's cash in hand, which is an asset, decreased become credit. Illustration 8. Commission received by cash 6,000 rupees. Explanation. Under this illustration, commission received by cash, by an income for the business, increased the asset by which cash account is debit. On the other hand, business received commission, which is an income, increased the capital and is to be credited. Regarding income, the specific income account name will have to use for credit instead of crediting capital. So, the commission account will be credit in this business transaction. Solution. Cash debit and commission credit for 6,000 rupees. The picturization of the above explanation will make you understand the concept of debit and credit clearer, without any kinds of doubt. Here, commission received as cash, which increased the asset of the business, and cash account is to be debited. At the same time, the commission received is an income, which increased the capital and is to be credited. But instead of using capital, the particular income account name is to use for recording transaction. Hence, here commission account is to be credited. Illustration 9. Withdrawn cash by owner for his personal use 5,000 rupees. Explanation. In this business transaction, the owner itself withdrawn cash from his own business for his personal use. In such circumstances, the capital of the business got decreased and debit. But for accounting transaction identification, the personal withdrawal from business is termed as drawings and always a debit item. Hence, here drawings account is to be debited. By withdrawal, the second accounting element cash, which is asset got decreased and cash account is to be credited. Tuition, drawings debit and cash credit for 5,000 rupees. The picturization of the above explanation will make you understand the concept of debit and credit clearer, without any kinds of doubt. Here, owner itself withdrawn cash from his own business for his personal use and the capital of the business got decreased and is debit. But for accounting transaction identification, the personal withdrawal from business is termed as drawings and drawings account is to be debited. By withdrawal, the second accounting element cash, which is asset got decreased and cash account is to be credited. This short lecture is brought to you by
Home of Accounts.
Please don't forget to subscribe.